Yes, people. So in this video, we're going to take a look at this article around understanding money and how it works. So money is basically a thing that we use as a medium of exchange, and we can't really live without it in the sense that we need it to buy things, pay for things. For example, pay for your rent, to buy food, to be able to put petrol in to drive your car or gas, to pay your heating bill, pay your energy bills, and so on. So we need money in today's world to be able to pay for our lifestyles and basically survive. So money is one of those fundamental inventions in human history, shaping economics, societies, and daily life. Now, it might seem simple, like coins or paper bills or digital numbers in a bank account, but money is actually quite complex. It's a system built on trust, exchange, and value. Understanding how money works will basically help people make better financial decisions and appreciate its role in the modern world. Now, unfortunately, I don't know about you, but when we were in school, we weren't actually taught much about money and how it works and basically all these different type of things. In the sense that where we could take that knowledge after school and use it in our adulthood and lives, you know, basically to be able to succeed really well. So money wasn't really something of financial elements or how to plan budget, how to buy a house, that type of stuff. All related to money wasn't really taught in a way where it can be taught, in contemporary society to be able to help younger people understand the importance of it and not be afraid of it and not be afraid to talk about it. So if money, for example, was taught in education, people would understand the value of it much earlier on. And then when they come to, adult life and later adult life, at least then they know how to deal with it and be better able to plan budget, organize themselves so they don't get stuck in future life. So at its core, money serves three main purposes. It's a medium of exchange, a unit of account, and a store of value. Yes, so paper money, they say in itself, doesn't have intrinsic value. So on the note, you'll see things like, you promise to pay and, that kind of stuff. So people see it as a trust mechanism, right? In the past, throughout the millennia, things like gold coins, silver coins, barter took place. People used gold and silver to purchase things because it had intrinsic value. It was a solid item. But then in later years, we've now used paper bills more. But then obviously now we have digital elements as well. So for example, you open up your phone app on your mobile phone, for example your iPhone. You just click a button and you click a few more buttons and you can send money from your account, for example £100, to somebody else, pay a bill, send it to a friend or family member. There's numbers being changed there digitally. Obviously, that didn't exist in the past. In the past, it might have just been a gold coin, silver coin, or some sort of other precious metal where you would have to carry it around with you physically. So it had its benefits, but at the same time, there was also some negative elements as you couldn't carry large amounts of it on your person, on your body. Whereas with the paper money or digital money, it's easier to send large amounts very quickly. So instead of swapping a basket of apples for a pair of shoes, one might use money to trade simpler and more precise. So, as a unit of account, money provides a common measure that helps determine prices, compare value, and also keep financial records. And as a store of value, money allows people to and businesses to save, plan for the future, be confident that it will retain worth over time, at least under stable economic conditions. Well, that's questionable in the sense that we have inflation. So as inflation rises, you lose a percentage of your paper money's value. So for example, maybe 10 years ago, with the £100, you'd be able to buy, let's say 10 grams of lamb meat. But today, 10 grams of lamb meat might cost you 100, £50, £140. So it's the same quantity, but the price and the cost is much higher because of something called inflation. That's something what basically can take away the value of your money. That's something important to learn more about and delve into when it comes to building wealth, understanding money and how it works. The concept of money has evolved dramatically throughout the years. Early human societies relied on barter, so people would go into a marketplace or turn up in an area and they just basically exchange goods. For example, someone would exchange food for drink, or maybe some food items for clothing items, or that kind of stuff. So over time, commodities like salt shells or metals became early forms of money. So sometimes people would use, like Native American tribes would use, for example, certain type of shells as a medium of exchange and money. So some of these things were durable, divisible, and also accepted throughout society. But obviously, over time, society started to use paper money, bills, as a promise of what they were going to pay to the particular individual. Eventually, governments began issuing coins made from precious metals like gold and silver, guaranteeing their weight and purity. And then this led to greater trust and consistency in trade, although there were some unscrupulous figures who would try and mix some of the silver with other cheaper, less expensive, less valuable alloys. So, with time, paper money replaced coins as a more convenient alternative. Governments and banks issued notes that represented claims on precious metals stored in reserves. Later, countries moved away from the gold standard. So you saw that in 1971 with America and the US dollar basically being backed by things like oil rather than gold. And even in the early 1900s, you had America where they started to take people's gold in the country. And then you had things like the big crash of Wall Street 1920s and the big economic turn down and all that kind of stuff. So allowing money to take on a purely symbolic role is what is basically now known as fiat currency, which is what I was talking about earlier in this video. When it comes to intrinsic value, fiat currency doesn't really have it. So contemporary cash, Guala as it's sometimes known, has basically value not because it's backed by something like gold or silver, but because people trust it. That's why it says, I promise, to pay the bearer or something like that on some of these notes, that will be accepted by others and that governments will manage it responsibly. But nowadays, so of the last kind of decade or so, we've started to have something else, digital money, but also something called cryptocurrency. For example, Bitcoin, Ethereum, Solana, Litecoin, XRP. So some of these cryptocurrencies are now big kind of dominators. So especially Bitcoin, which is worth over $100,000, that's dominating the scene right now. We've also got potential future banking institutions in the coming decade or so, bringing in CBDCs or central, banking digital currencies. That could be something taking over soon, where money is much more digital. So in the digital age, contemporary society, money's become increasingly abstract. Financial transactions are taking place electronically, very quickly, through credit cards, online banking, mobile payment apps. So I remember when I was younger, when I'd walk into the shop, I'd go and buy something like a sweets or maybe a drink, kind of iron brew or something like that, a packet of crisps, and we'd pay, 20p or whatever it was in those days. You'd have a couple of pounds of, 20p coin, 50p coin, 10p coin, and you'd pay for something like a chocolate, some bread or whatever. Now you walk into a shop and people pull out a plastic card and they just swipe it on the machine. Before you'd put it in and type in your security code. Now you just hold it on the machine and it automatically swipes it and deducts money from your account. So you can see how digital money has become much more prevalent and people are using cash much more less than they are in the past. Cryptocurrencies like Bitcoin is a new form of digital money. It operates without central authority, relying instead on a blockchain technology and cryptographic trust. While these innovations have expanded financial freedom and accessibility, they also raise questions about regulation, security, and long-term stability. So that's what I was saying about Bitcoin. Obviously, Bitcoin now is a major form of value being stored in the blockchain and so on, and it looks like it's just going to get more popular as more and more institutions are starting to accept it. So money's value is influenced by a lot of factors like supply and demand, inflation, the health of the economy. central banks play a major role. They manage the money, the supply, and interest rates. For example, here in the United Kingdom, we have the Bank of England, which sets interest rates on a regular basis in order to maintain economic stability within the country. So when there's too much money, prices, rise, causing inflation, and then you can have economic downturns and less spending from consumers and so on. So when there's too little circulates, economies slow down, fall into recession, balancing, and coming to equilibrium with these two different forces is what's needed to have a decent economy. So ultimately, the main thing about money is you've got to really understand it, start to learn about it, do your own research, your own due diligence to understand it, so you can actually start to acquire it and build your wealth, purchase assets in order to create more wealth for yourself in the future. So, money works because society collectively agrees on value and function, and it represents trust in institutions, economic systems. Likewise, understanding money is recognized as something that's not just physical or a digital code, but a shared belief in modern humans and a medium of function. So by appreciating how money works, understanding how money works, we can navigate financial systems, move around and understand them better, and then understand how money is a medium of exchange, and also contribute to a stable and prosperous economy. Okay, people, do let us know what you think about that in terms of all the different elements around understanding money. Drop a comment in the comment section below. Let us know what you think about money. Don't forget to like, share, subscribe. Catch you in the next one.